Hey everyone, welcome back to Corporate Decoder, the place where we unpack the money secrets hidden in plain sight. Today we're looking at Franklin US Government Money Fund's annual report from June 2025, and let me tell you, it's a bit like watching paint dry but with millions of dollars involved. So let's make it interesting. Before we dive in, if you love understanding where your money goes and how big companies operate, smash that subscribe button and ring the bell. Also, come join our Discord community. The link is in the description below. It's a great spot to chat about these deep dives. Alright, so this is basically a checkup report for the Franklin US Government Money Fund. It tells us how the fund did over the year ending June 30, 2025. Think of it as the fund's report card from the SEC. Now let's peek at the cost, because everyone likes to know what they're paying for. For a hypothetical $10,000 investment, Class A shares cost about $50, which is an expense of 0.49% of your investment. Class C shares are a bit pricier, costing around $116 for that same $10,000 investment. That's 114% of your money going to costs. It seems like the government money fund isn't free, which is a surprise to no one. Class R shares fall somewhere in the middle, costing about $101 or 0.99%, and Class R6 shares are the cheapest at about $48 or 0.47%. Fancy that different classes have different costs. The fund as a whole is massive, with over $5.2 billion in total net assets. That's a truly enormous amount of money being managed. And get this, the administrative fees alone for the whole fund for the year added up to almost $15 million. That's a lot of paperwork and management behind the scenes. Looking at the financial highlights, the fund aims to keep its net asset value at a stable dollar. For Class A shares, the beginning net asset value was $1 and the ending net asset value was also $1. It sounds like nothing happened, but let's dig deeper. The total return for Class A shares was 4.26%. This means that by the end of the year, your initial $10,000 investment would have grown to about $10,426 if you take into account any dividends or income. Not too shabby, considering it's generally a very safe investment. For Class C shares, the return was 3.59%, so that $10,000 investment would have grown to around $10,359. Class R shares brought in a 3.74% return. Class R6 shares managed 4.28%, and Class P1 shares, which were only offered for part of the year, had a 3.26% return. It's interesting to see how the different share classes perform with their varied fee structures. For Class A shares specifically, the fund had over $5 billion in net assets. This is the core of the fund's value for those investors. Class C shares are much smaller, with about $38 million in net assets. This tells us that most investors prefer the lower cost shares, or perhaps the fund is geared towards institutional investors for the other classes. Class R shares had just over $5 million, which is quite small. Class R6 shares, on the other hand, had over $111 million in net assets, and Class P1 with decent assets of over $75 million. The fund made a substantial amount of money from its investments in an affiliated portfolio. This affiliate is essentially another fund or part of the same group that Franklin Templeton manages and the money fund invests its cash into. The income from this was a huge $235 million. As we saw earlier, administrative fees were almost $15 million. After all expenses, the fund's net investment income was over $217 million. This is the money left over from the fund's operations and investments. The fund paid out a massive $21 in distributions to Class A shareholders. This is usually in the form of dividends from the income earned. Looking at the changes in net assets, the fund saw a net increase of over $22 million. This is after accounting for all the income distributions and share transactions. For Class A shares alone, over $2.9 billion worth of shares were sold. But then they had to buy back over $3 billion worth of shares. This means more money flowed out than in for Class A shares during this period. For Class C shares, it was a different story, with a net decrease of almost $10 million. Investors were redeeming more than buying. Now let's look at what the fund actually invested in. Their main holding is the US government money market portfolio, which they own almost half of. This is where all their money is going. A huge 75.4% of the portfolio is in US government and agency securities. This tells you the fund is heavily invested in very safe government-backed assets. They hold a lot of these securities with specific maturity dates and interest rates. For instance, they have a federal farm credit bank's funding corp security maturing in July 2025, paying 4.234%. They also hold Federal Home Loan Bank securities, like one maturing on July 1, 2025 at 4.51511% with a face value of $273 million. On top of that, they have 24.5% in repurchase agreements. Basically, they lend money overnight and get securities as collateral. For example, they have a repurchase agreement with Bank of New York Mellon maturing on July 1, 2025 at 4.37%. This is how they earn a little extra on their idle cash. The total cost of these government and agency securities was over $8.2 billion, and the repurchase agreements cost around $2.6 billion. For the master portfolio, the total net assets at the end of the year were almost $11 billion. The master portfolio itself generated over $457 million in net investment income. The report also includes the auditor's opinion, and it's a clean bill of health, essentially saying everything is presented fairly. PricewaterhouseCoopers audited their books, and they've been doing it since 1948. That's a long-standing relationship. Interestingly, the fund reports a significant amount as qualified net interest income over $217 million. This is important for tax purposes, especially if you're dealing with state taxes, as this income might be exempt. Finally, the report mentions board approvals for management agreements. The board reviewed everything and approved the continuation of the management agreement for another year. They looked at the quality of services, performance costs, and economies of scale. So what's my take on all this? Franklin US Government Money Fund is a massive, stable money market fund. It's not designed for explosive growth, but rather for safety and a steady stream of income. The slight differences in returns and costs between share classes highlight how even in seemingly simple investment vehicles, choice matters. The sheer size of the fund and its investments in government securities means it's deeply tied to US economic policy and interest rates. The large and its investments in government securities means it's deeply tied to US economic policy and interest rates. The large administrative fees are a cost of maintaining such a large operation, but the net income generated shields our eyes from that. It seems the fund is doing exactly what it's supposed to be doing, and that's providing a safe place for money market investments. Alright, that's our look into the Franklin US Government Money Fund's annual report. What are your thoughts on these numbers and what they mean for the fund's future? Let me know in the comments below. If you found this breakdown useful, give it a thumbs up and subscribe for more corporate financial insights. And don't forget to join our Discord community linked in the description. Thanks for watching, and I'll see you in the next deep dive.